Good morning, everybody. Thanks for joining us for another Thursday Q&A training call. For today's call, I'm going to start off with a brief topic on how to create your story files. So this is kind of like preparing your arsenal so that when you're out in the field and you need to discuss your value proposition about what kind of presentations you can offer, what kind of service you can offer for your clients, you have a set of presentations that's ready to go and you can immediately use those from your mobile device. So we'll start off with that, but I do want to remind you this is an open Q&A. So if you have any questions as we're going through those, just make sure to type those into the questions area in your GoToMeeting toolbar. There should be a little orange arrow in the top right corner of your screen. If that toolbar is collapsed, you can click that little orange arrow and it'll open it up. And then as you type in questions there, I'll be monitoring those on my other screen here, and I will do my best to address those for you. Another thing to note in that GoToMeeting toolbar, there is a handout called the Getting Started Guide. This is kind of our playbook. It has a little bit of everything in there. So you got some walkthroughs on how to do things like add video from the mobile device. You've got some scripting, some sample emails, a lot of very useful stuff. So make sure to take advantage of that. You can download that at any time by simply clicking on that link in the handout section, and it will be stored to your desktop. So with that said, I'll start off on the first topic, and we'll just kind of discuss how to create your story files. So the whole idea behind this is you want to be able to come into your app and immediately pull up a list of several presentations that you can show off to new realtor prospects, to new borrower prospects, to really illustrate what kind of service you offer. Now, let me open my mobile device here so you can see what I'm talking about. If you're not familiar with how to log into the Mortgage Coach app, or if you don't yet have it installed, make sure you install the Mortgage Coach app. Your clients, when you send them a link and they consume this on a mobile device, they're going to be prompted to download and install the app. So you really should be familiar with what that layout looks like. So if you haven't done it yet, take a moment. I don't mind the multitasking here. Pull open your cell phone or your tablet, whatever you prefer to do it on. Go to your app store. If you're on an Apple device, you're just going to click that little App Store icon on your home screen. If you're on an Android device, you can tap on the Play Store icon. That's going to take you over to the Google Store so that you can download the apps. When you do your search, just search for Mortgage Coach. So I'll show you what that looks like. It's just Mortgage Space Coach, and then you're going to see these two apps are the most important ones to have on your device. Obviously, the Mortgage Coach app, this is the one that allows you to view the presentations on your mobile device. Same one your clients are going to use, but there's a second level to this app where you can log into it. So I'm going to be showing you how to do that today, and I'll show you where to retrieve your files so that you can easily present them to people. Now, the second app is RateWatch. If you haven't taken advantage of this yet, this is just a no-brainer. Install this one, log into it, and just let it run. All this is doing is it's going to alert you anytime there's any major shifts in the marketplace so that you can, try and lock in rates before they change, or, advise your clients on when they should be locking, or, what current market conditions are. And it's got commentary in there from experts that come through every single day, and you can actually share those out with your partners and prospects. So make sure to take advantage of that app if you don't have it installed yet. Now let's take a look at the Mortgage Coach app real quick, and I'll show you what I'm talking about. When you first open the app, you're going to land on a screen that looks like this. And this screen is the same one that your clients would see if they just tapped on the app as well. Now, it's always going to show the most recently visited link in here. So when your clients open this app, they're going to see one of your links after they've tapped on it. Now, that being said, if they have the app installed and they click on one of your links from an email or from a text that you sent them, it's automatically going to open straight into that presentation. So they won't have to try and type in the link or anything. Now, when you're in the field and you want to be able to show off the types of presentations that you can offer, you're going to want to log into this app. So you do that by clicking the little silhouette up at the very top left here. And I'm going to log out just so you can see what that looks like. But the screen you're going to be led to looks exactly like this. And you're going to put in your email address that you use to log into Edge and the password you use to log into Edge. And then you click sign in and you get a little bit different layout here. Now, you noticed I've got no views or reports today. This is a sample account, of course. But as we continue going through these, when I pull open these different presentations, it's going to update the number of views I've gotten today. And it's going to update some of the metrics. Now, one of the things that you have available to you in here, if you just kind of want to define how well you're doing, is you can go to the performance area here. And you can actually see a rundown of how many report views you've gotten per week or month. You can look at partners or clients, and it just kind of gives you some totals and lets you know what's going on, how effective are you being with your presentations. Now, when we get into wanting to deliver our story files, we're going to want to go to the client section. I'm going to show you kind of the end result of what we're trying to accomplish, and then I'm going to walk you back and show you how to build these. Now, when I do this, if I'm in the field, I'm going to immediately go to my search button up at the top, and I'm going to search for a keyword that I use for all my story files. The keyword that I use is mobile, but you can use just about anything you'd like. And you'll see the reason I'm doing this is because I have tagged a bunch of these files with the word mobile in front of them. So when I do that search, it's going to pull up a specific set of files that I have tagged. Now, these are not straight borrower facing files. These are files that I made copies of. So I'll show you how to do that process a little bit later. But the idea behind this is you want to have a specific set of presentations that you can show off. Some of the more common ones you can see on my screen here, points versus no points, an annual mortgage review. This is great so you can talk about how you stay top of mind with your clients every year by giving them a review of their refi options. And it's important when you talk about this is that you're still going to do it even if it's not a great refi opportunity. You want to show them that, yep, it's not time right now, but I wanted to show you what the numbers look like every year so you can make your decision. This is going to lead into other conversations, of course. If it's not great for a rate and term refi, maybe they have a goal that you weren't aware of. Maybe they're looking to take some cash out and do an improvement on the home or something like that. But being able to deliver these every year for your client is very important so that they think of you when they think of mortgage. We've got FHA versus conventional, very common strategy, but it's a great teaching tool just because there's a lot of misconceptions about what FHA loans are and the mortgage insurance on it. And you can really illustrate things like the declining mortgage insurance over time on an FHA loan that, is not published in the news. They never talk about this. They just talk about MI lasts for the life of the loan. But then I've got a move up buyer presentation that I put together. And basically that's one where you're just showing what happens, their current mortgage situation versus potentially moving up into a bigger house at, better pricing today than they had before. You got purchase power, very, very simple idea with just different purchase point options. So like a $250,000, $260,000, $270,000 kind of thing. And that's just so that the borrower can see, exactly what the payments would be at each interval and decide whether it would be a good economic fit for them. I would always recommend having a rent versus own in there. That's your first time home buyer report. So that's the one you definitely want to be able to show somebody who's kind of on the fence. I've got some others here. The cost of waiting strategy. That's a great one to be able to show off to your realtor partners, just to illustrate, how you can deliver some urgency to move the transaction along. I've got another one here called short refi. That's one where it's a little bit more detailed. It may not be one of the ones you want to use as part of your value prop, but this is a refinance where the client has to bring in a little bit of money to get to that 80% threshold so that they don't get either a rate hit or they don't get mortgage insurance, something like that. But this is a little more advanced strategy. So I'm going to show you how to build these. Not all of them today because that would take a couple hours. But let's go through some of the common ones, and I'm going to show you how to repurpose some of your old files. So give me just a second here and pull up my Edge. There we go. Now, when you want to repurpose an old file, and what I mean by that is you're going to go through your borrower list and you're going to find a presentation that you were particularly proud of, something that it either resonated with a goal that the client was working on, or, it helped them achieve something, help you achieve something. Maybe it was what it took to get that borrower off the fence, whatever the case may be. You just want to go through your past presentations. And you can always go to view all if you want to and actually do a search through your presentations for a specific name if you remember one that was particularly good. Or you can leave this all blank and actually just hit search again, and it's going to retrieve your entire database. So you can see they've got names on the front of them, and then when you hit the little arrows, it shows you the actual presentation. So I've got things like, a closed loan demo, construction versus pre-built. I've got all kinds of goodies in here, divorce planning, government loan comparisons. But most of the time in your list, you're going to have a bunch of client names. So you may have some marketing presentations that you've put together that have headlines that are kind of similar to the ones I have in here. So those are great ones to be able to repurpose. But the idea is you want to come in here, find something that you really liked at some point. Maybe it was a fixed versus ARM, right? And this one I actually posted to Facebook, so this is a good one to repurpose. I'm going to go ahead and open this analysis because I want to create a copy of it that I can use for my mobile strategies. So I'm going to hit Open Analysis. And then once this opens, I'm going to come into my analysis screen here. And I'm just going to use the copy analysis function. So I'm going to hit Copy Analysis, and it's going to ask me, do you want to make this a current client or a new client? Now, in my case, I'm going to make this a new client. I don't want this to be associated with the original file I did. So I'm going to hit New Client and then hit OK. Now, it's going to create a copy of that presentation. And you can see that when I come in here, I've got my loan options that I had in there, my current options for their current mortgage. So I don't have to redo any of the loan parameters in here, but you notice it blanked out the name for me. And that was kind of strange. I ran into a bit of a glitch there. So let's go back and find one that has some loan products. I think that's the problem. I found one without loan products. So we'll go into this purchase borrower, and I think that was the one I was trying to look at initially. There we go. So I've got just a simple option here. I've got a $180,000 purchase, and then I'm actually going to create a second product on this so it makes more sense. And I'll call this one 190K purchase. So this is just our purchase options report. I'll copy my original loan product so I don't have to redo the work, and then I'll just change some basics about it. And now that I've got this in there, I've got a valid comparison that I can show off. And this is just a simple, here's what it looks like at 180, here's what it looks like at 190. And I want to repurpose this one to be part of my mobile story calls or my mobile story presentations. I'm going to use that copy analysis, copy it to a brand new client. And then once I get in there, it's going to tell you your client has been copied. You can make changes on this one and it won't affect your original. So now I can come in here and I'm going to toggle this over to be a marketing presentation. And for the report headline, I'm going to start off with my keyword. So mobile purchase options. And I'll even put today's date on it just so we can see which one that is in our file list. Now, because I use that copy function, all the original stuff is still in there. I can come in and disable or enable anything I'd like. So maybe I don't want these guys in there. And I just go straight through. And when I get to the very end of it, this link here that is generated is independent of the original link. But what this also means is that now if I was to go into my mobile device and try and look for this, well, let's go back to the mobile. And I'll go back a step and do that same search one more time. And there it is. There's the one I did today. So there's my mobile purchase options 818. So I have repurposed a past file to make one of my mobile strategy files. Now, when you want to show this off to somebody, you saw what I did to get here. I started off by logging into the app by hitting that silhouette guy. Once I logged in, I went to my client list. Then I did a search, and I used the keyword that I associated with these. And then once the search came back, now I can open these at will. So if I wanted to show off that purchase options presentation, I would come in here and tap on it. It is a total cost analysis, so I'm going to click total cost analysis. And now I can view this report. When you hit view report, it's just going to open up the finalized version of it. So you hit I understand. As you're showing this off to a new prospect, you're going to show them that this is an example of a report just showing some basic purchase options. And when you click on the summary, you can see we've got two different options against each other. We can see the payment breakdowns, the closing costs, and if you've got a reinvestment strategy on one of these, that's a great option to be able to show as well. But the idea behind this is you're going to navigate through it and you're going to show them the different areas that are part of this report so they understand what it is. But you're not going to spend too long on this. You're going to then transition into another one. So for instance, I also do annual mortgage reviews for my clients. So when I go in there, I'm going to view that report and show them what an annual mortgage review looks like. It can have a video on it, so if you wanted to preview what your video looks like, you can hit yes there and it'll play the video. And there's me doing a video from the other day. And then again, you can drive into the summary section, show them this move up presentation. Here's what your current situation looks like versus, a new 15-year option, a new 30-year option at a higher value. And then as you continue to tell your stories, you're simply just going to back out to your main screen and you're going to go to your next option. So maybe you've got an FHA conventional that you're really proud of and you've tagged that one. You're going to go in and view the report. And don't forget, as you're doing this, you're showing these off, you can share these with whoever you're talking to. And it looks a little bit different in Android and iOS. On Android, you actually have a little share report functionality right here. On iOS, you're just going to tap on your address. And what it does is it brings up your mobile business card, and there'll be a little share report link right up at the top here. Both of them have the same functionality in terms of what they let you do. It allows you to share via text message. You can share via email. Android has a few more options that allow you to do some social media posting. You can post to Google Hangouts and stuff like that. But the point is, you can actually immediately deliver this to the person you're talking to. So if I wanted to text this to the person that I'm talking to, I would just hit my share report option. And then I would enter their phone number in the text field and hit send, and it's going to send this link over to them. And the idea behind doing that is you want them to tap on that in front of you. You want them to be prompted to download that app. And then when they've got it, it's going to breadcrumb them right back to that link so that now they can have this on their app too. Now, hopefully this is turning on some lights for you when you're thinking about talking to new realtor partners. When you're trying to deliver what you do for mutual customers to that realtor partner, and you're sharing these constantly with that partner, each time the partner taps on one of these, it then gets stored in that partner's history list in Mortgage Coach. I'll show you what that looks like. So the next time they come in to open the app, they're going to land at this page. They're going to see the last link that you sent them. But if they tap the history button, they're going to see all the other ones that you shared with them too. So now you've got kind of a passive strategy going on. So when that realtor's talking to his potential or her potential targets or prospects, that realtor partner can now show off the presentations that you showed off to him or her. So you're easily able to deliver this advice and keep it moving forward. Now, it works especially well with partners, but it's nice to have a list of files that you can easily refer to when you're in the field when you get that question about, well, what sets you apart as an originator? What do you do that's different from what everybody else does out there? And, most clients are going to be asking you questions about rates and payments, right? And naturally, we want to take the conversation away from rate and payment, and we want to talk about the education. We want to talk about meeting the client's goals with the financing versus let's just make sure your payment's okay. I mean, we all saw what happened in 2008. Everybody was so concerned about the payment, they forgot about the long-term part of the mortgage. So part of what you do as a consultative originator is to ensure that your clients make the best decision possible. And the only way to do that is through solid education. So that is the basics on how to create your story files, what you would use them for. But let's go ahead and transition the call now. We talked a little bit about the mobile version of Mortgage Coach that is available for you. For those of you who don't yet have Rate Watch, I want to cover a little bit of Rate Watch. And in the meantime, I don't see any questions in the support box. This is an interactive session. So if you'd like to see a specific strategy, or if you'd like me to answer a question, demonstrate something for you, I can do that. But I need to know what you want to see. So just chat me in a couple of questions there, and I'll do my best to illustrate those. So for now, while I'm waiting on some questions, let's head into the Rate Watch and just kind of give you a little bit of a dive into what Rate Watch is. If you haven't seen Rate Watch yet, Rate Watch is just your mortgage-backed security monitor, and it's your notification tool. So you're going to get the immediate look when you first log in. You're going to see candlesticks like this, and this just shows you what the market's been doing lately. And you can see we've actually been pretty volatile lately, but we're holding a trading range. We're a little bit below where we were a few days ago, but we're kind of holding a trading range. Now, when you see gaps like this, it's important to identify what that might be. This could have been a rollover day. This could have been just a gap down opening as a result of news from the Fed. There could have been any number of reasons that this would have happened. Now, the easy way for you to identify what that was is to go back and check your commentaries. I'll show you how to do that in just a second here. But this screen and actually all screens in Rate Watch are shareable. So you've got the ability to share on an Android device. It looks something like this. And let me see if I've got an iPhone that I can bring up for you real quick. There we go. And we'll dive into the rate watch there too. So the sharing option is a little bit different. On Android, you've got these three interconnected dots. On an iPhone, you've just got the share key up at the top. But what it does when you hit share is it actually takes a snapshot of that screen, and then you have the option on how you want to share it. So if I wanted to text this to somebody, I would just hit SMS. And then it's going to pull up my text editor. And same thing on the Android side. If I go to share, I'll be given the options on how to share it. But you can see what it does. It actually just takes a screenshot of whatever screen you were on and allows you to type in a phone number so that you can share it with somebody. Now this particular screen, it's cool to be able to share, but you might want to provide some color around what it is. There's other screens in here that's going to make a little bit more sense for just kind of delivering, the easy status update on the rate on the market to partners and borrowers. I'll show you where those are at. Now, when you first come into RateWatch, I said you're going to get this candlestick chart, but you're also going to get a background color. You can see that the background is green right now, and that's because we're in positive territory in the market. Now, we're not very far in. We actually looks like we've kind of gone up and down today, but we're only 3 basis points up at this point. Now, this kind of movement, I wouldn't expect to see a whole lot of change in rates from a lock desk. And in fact, one of the things you want to identify when you're using the rate watch is how long does it take for your lock desk to change something based on either positive or negative movement in the market. You're going to find that they're a lot faster to reprice for the worse than they are for the better. Because obviously, you offer better pricing and the market tanks, you're losing money. So they're going to err on the side of caution, which means they'll reprice for the worst a little bit faster than they will for the best. But if you can identify what that time gap is, and you know that when you get an alert from RateWatch that says, hey, the market just tanked 20 basis points, it's going to take your lock desk, let's say, an hour to react to that. You've got an hour. So if people are in the funnel right now and they're considering locking, and you've read the commentaries and you know that we're kind of testing a bottom range right now, and it may be a good time to lock if we start seeing movement changing, that might be a time when you reach out to that borrower and say, hey, the market is about to make a shift here. There's the potential of losing a little bit on the rate. We might actually go up a tad on the rate. So if you're ready to lock, now is the time. I wouldn't recommend waiting through this next change because it may affect pricing adversely. And on the other side of the coin, if we go up 20 basis points, how long does it take your lock desk to give you better pricing? And maybe it's, when you're looking at negative versus positive, maybe it's a 1 hour change on negative pricing, and then, it's a 4 to 5 hour change on positive pricing. But as long as you can identify what those windows are, you've got a little bit of you got your own, not a crystal ball on the market, but you've got a lead time on the market, which helps a lot for your rate quoting. Now, the other things that are available inside RateWatch can all be accessed through this menu bar here. So if we tap the menu bar, you can see I'm logged into 2 different accounts right now, but same options here. We've got the day watch, which I think this is one of the more shareable screens because this one really does give you a view at every 5 minutes, what's the mortgage-backed security market doing? This is also a great response to that question we always get from anybody who finds out that we originate loans is, oh, how are rates today? Well, how am I supposed to answer that? I don't know anything about your credit status. I don't know anything about the LTV you're looking for in a loan. I don't know if you're looking for government or conventional. But obviously, you never want to give that answer to somebody that it's going to be, you're going to need to collect information before you can give them an actual rate. So the real answer to that question is, well, let me show you what the market's doing. We're all dependent on the same rates depending on what your qualification parameters are. But the idea is to get your rate when the market is doing well. So if I wanted to share one of these with my clients, what I would recommend doing, especially on the day watch screen, is I would recommend turning the phone sideways. And as long as you've got the gyro enabled on your phone, it'll switch the screen for you. And it makes a little bit more sense when you're looking at day watch because they can really see exactly where the movement in the market was. And the idea behind this is you don't necessarily need to explain what the pricing is. What was the bid price versus the close price? That's not going to matter to anybody. They have no idea what this means. Now, that par is 100. So anytime we're above the 100 trading range, we're gonna end up staying in this coupon until we probably get to about 105 or something like that, and then we may go to another coupon. But all this means for us is that each indicator here, you can see this is 65 basis points up, this is 67. So each one of these increments are basis points here. Now, when we look at how much the market's moved, we've had a lot of volatility today. We've had about a 15-point total swing up and down, but our end result, we're only 3 basis points up from where we started here. But what this does help you get across is exactly how often the market changes. And if you wanted to identify another date that had more significant changes, you can actually go up to the date part here. When you tap on that, you can find a different date. Let's say maybe I want to look at yesterday. And then when you tap on the screen again, it's going to update the day watch so that it's showing yesterday's data. And yesterday, we actually did have some movement. You can see we had some kind of choppy stuff in the early morning. And then once we got about 11, we had a sharp rise up. And this is where we would have alerted you. So we alerted you when there's 15 basis point change in either direction. In this case, there was. We actually ended up closing higher, which is great news. So this is one of the ones where I might have expected to see Lockdesk this morning give you a slightly better price than they gave you yesterday, based on yesterday's basically the end of the trading range. So something like that. I mean, this is really your trigger here. When you get that notification, positive or negative, now it's time to be kind of check out the Lockdesk, find out what they're doing, find out where they're at, see if there's been any movement on it. But this is a great screen to be able to show your clients, because this is something where you can tell them, hey, I get notified whenever there's something that's going to affect rates. This is an example of something that did. All right, let me turn this vertical again real quick. There we go. Now, next part inside RateWatch here, if we go back to our menu bar. Oh, and actually, before I dump out of that, remember I said you can share these. Just like the other screen, you can hit the share button right here, or you can hit the share, I don't know what the heck to call this, but interconnected dots on the Android is your share function. Well, let's take a look at alerts. Now, alerts, these are the ones that we issue to you when there's a movement in the market. There hasn't been an alert on market movement today, so there's nothing in here. But yesterday, we would have seen one in here for that 15 basis point move that I showed you earlier. Now, edge views, this is kind of important. This is so you can track yourself. How many edge views have you gotten on your presentation today? Again, I'm logged into 2 different accounts here, but you can see this is the one we were looking at early on in the call when we were developing our story files. When I opened that FHA or that annual mortgage review or the purchase options, each time I did that and then closed it, I got an alert on those guys. So if I wanted to see, specific presentations that I got alerted for, all I have to do is hit the little I next to it, and it'll show me the link for it. And I can tap on that link and open that presentation so I can see what it is my borrower saw. Now, you can also change the days on these too. So if you wanted to see different dates there, maybe you wanted to look and see what last Friday looked like or something like that, you can certainly change to it, and it'll show you all the notifications you got on that particular date. Now, remember I said you don't have to be an expert on these. This is where the commentary comes into play. Dan Rawich publishes a daily update to let you know what's going on in the market. And it's both written and it's a video. So this link is actually tappable, and you can tap it to open up Dan's video, his video commentary of what's going on today. But you can see he's anticipating this is kind of a flat trading range right now. We're not going to have a whole lot going on today, but this is another one that's shareable. So whichever commentary you tap on in RateWatch, when you hit the share key, it's going to share that commentary. So you can send it via email. I wouldn't advise sharing these via text because some of them are a little too long for text, and it might convert it to a multimedia text, and that could be 6-7 texts in a row for your borrower. So don't necessarily want that to happen. I'd recommend sharing these via email. Now, the other person that does updates for you every day is Neil Trineri, and he does only a written update, but it's a little bit more verbose in that it actually shows you all the numbers behind the different items that are affecting the mortgage-backed security market. And then towards the very bottom, he actually gives some advice. And you can see he sources this from Bloomberg. So a lot of this advice you may already be getting. It might be very similar to what you're getting out of Bloomberg. But these are, he actually ends it up with what he feels are, let me get down to it. This is a pretty long one. What he feels his position is, and he tells you short-term changes to neutral, long-term stays short. And then he gives you the meanings of what those are. But again, this is shareable as well. Now, the lender's barometer, this is one of my favorites actually. This one shows you of the 130 or so lenders that we track through Optimal Blue, and they're tracking all their rate sheets across the country. Of those 130 lenders, how many of them have issued better average pricing across all their rate sheets versus how many have issued worse pricing across all their rate sheets? And you can see in this case, this is kind of illustrating what I showed you earlier, is that we had a good rise yesterday that kind of brought us up. So a lot of the lock desks have been issuing better pricing this morning than they had for yesterday. And that's illustrated by this pie chart here. But this doesn't, you can see there's only, 71 lenders being represented here. We're tracking 130. So we've got some 59 lenders that on the average across their rate sheets really didn't change anything. It wasn't enough to do a single basis point change there. So when we look at this, and we can get an idea for the sentiment in the market, is that of the people who are issuing price changes right now, a majority of them are issuing better pricing. So this is a good visual for your clients. Now, you also have settings, and if you haven't set these up, I would highly encourage you to do so. You can do things like enable your text alerts if you want to get text notifications. You're going to get push notifications inside the app if you choose to enable that, and those are the ones that actually just drop down from the top and let you know, hey, there's an alert. But you can enable your commentary emails. You can enable repricing alerts, and those are the ones where I told you about if we get a 15 basis point change or not, or more, we're going to issue an alert. If you want to receive those alerts, just check the box here. And if you do want to receive text message alerts, make sure to check the box there and then enter your cell phone number in that field. Now let's go back a step here. The update schedule. These are static alerts, so you can specify, at what points of the day you want to be notified. Just what's the price on the market right now. I usually see people make maybe 3 or 4 selections. If you want to be notified hourly, you can certainly do that. I think that would drive me nuts to get hourly notifications, but completely up to you. Most of the time I see people get an opening bell and then maybe a closing bell and somewhere in the middle. But depending on your time, I'm in California. I really don't want a text at 6 in the morning. So I might do my first one at 8 in the morning and continue forward there. All right, so that's kind of the mobile in a nutshell between those 2 apps, Mortgage Coach app and the Rate Watch app. And I still don't have any questions, guys. I need some interaction here. Just anything that you'd like to see today. I know we've been covering refinance strategies in the QA sessions lately, so maybe we should cover a rent versus own strategy so you can see how that looks. So I'm going to get started on that. Hopefully that'll prompt some questions from you. So anytime you want to do a rent versus own, you're always going to do it as a client. So you're going to click on New Client here. New Partner is for your co-branded presentations, for your open house listings and so forth. But client presentations are always going to give you a total cost analysis or a rent versus own. And they have roughly the same information on them. There's some differences on the rent versus own in that it uses things like net payments. So it really is focusing on representing tax benefit. It focuses on comparing against continuing to rent versus owning, whereas just a total cost analysis will not include the rent at all. So it'll just compare the loan options against each other. But if I want to do a rent versus own, and I'll just say this is a first-time home buyer, the most important thing is I need to make sure and check rent, because then it's going to ask me about the rent questions in our system. If I leave it on own, it's not going to ask me about that. It's going to assume I want to do either a purchase or a refinance, but I don't want to include rent. Now, referred by, this is important. When you're working with a realtor partner and you've got mutual clients and you're being referred, you definitely want to put your referred by in here, just so you remember who did it. So this was John, realtor, and then put that realtor's email in this next field here. So I'm just going to use realtor@sample.com. Now, the reason you want to put their email address in here is the easy way to keep your realtor in the loop on progress that's going on within the loan or even pre-application is to have them notified when the presentations are viewed. Now, you have the option to be notified on all these presentations, but if you also put in a partner email address right here, you'll have the option at the end of the presentation to notify them as well. So they'll get those same alerts that you're getting via email, but it'll tell them, hey, this presentation's been viewed for 2 minutes and 50 seconds. And it'll have a link to it so that they can actually see what the current version of the presentation looks like. Now, when you're including videos on your presentations, especially if you're going through the loan process, maybe you're at the prior to doc condition area right now, and you've updated a video to let them know, hey, I need a new letter of explanation for XYZ, whatever it is, right? When you update your video on there and send it back out to your client, and your client clicks on that, your realtor is going to get notified. And then your realtor can click on that link and actually see, oh, that's what my originator was talking about with my client. So you've kept them in the loop without having to do anything. Now, friendly name here, usually you're going to use a borrower name. So let's just do John Borrower. And then for my friendly name, I'm going to describe what type of presentation this is so that when I come back, if I've got multiple presentations for John Borrower, I can identify that this one was an RVO and it was a first-time home buyer report. Now, as we continue going through this, you may not actually have spoken to this client yet. Your pre-application, maybe you're working off a lead sheet, whatever the case may be. Your goals here, you can certainly come back and populate these later, but in my case, I'm doing a first-time home buyer, so I'm just going to click Get My First Home. And then I'm going to continue forward. And at this point, there's only 2 fields that are required here, and you can tell they've got the little asterisk right next to them, and those are the rent and the rent increase. So if you haven't talked to your client yet, you kind of want to just guess at a median rent for whatever area they're at. If you have talked to them, obviously, if you can get the exact rent, that would be awesome. So I'm going to assume $1,500. Rent increase percentage, generally across the country, 3% is a pretty accurate figure. It can be a little higher in certain areas. I know in LA, the rent increase is something like 8%. So it just kind of depends on where you're at and whether there is rent control in your area or not. But across the nation, 3% is a pretty good figure to use. Now, when we talk about property appreciation rates, I'm also going to use 3%. So between the two of those, I have equity growth at 3%, but I'm also showing rent increase at 3%. Now, monthly rent insurance, if you're, and I'm going to assume going forward here, because a lot of these fields require borrower interaction, that I'm speaking with the borrower. I've collected some information, or I've got them on the phone when I'm preparing this presentation for them. Now, if you don't, obviously, some of these fields you're going to end up leaving blank until you can come back in and really put some accurate data in there. Standard deduction. Now, this one, I'm going to leave it blank for right now, and I'm going to come back to this after we've got our presentation prepared, because I want to show you what this does and what it gives you access to. Also, I want you to know so you can decide whether you actually want to represent it this way or not. There's 2 ways to represent tax benefit on this presentation, and that's, as a renter, you can represent it as there's no tax benefit at all. If you do want to show tax benefit on the rent side, you can enter the standard deduction here, and it will assume a benefit for just that standard deduction if they continue to rent. So I'm going to come back to this a little bit later. We'll prepare it without first, so you can just see what the general practice is. And then for those of you who like to have the tax conversation, we can certainly come in and prepare that. Now, income levels, these are all your qualification parameters. So if you are talking to your client, capture these, because you're going to see when you get to the products that it does show debt to income ratios. So I'll put in, let's say 75. And then for non-mortgage debt, let's say they've got about 10 grand from a car or something like that, and their payment's about $350 on that. Now, savings balance. This one actually comes into play in a pretty dramatic way in the rent versus own, because this is how much they currently have that's available for a down payment. How much do they have in the bank? So since we're going to be comparing continuing to rent versus home ownership, we need to represent what's going to happen to that money in either way. So if they continue to rent, it's going to stay in the bank and it'll continue to grow at whatever rate they've got it at. If they purchase a home, some of this is going to be used for the down payment. So they're going to have a new adjusted saving starts after the purchase. And we'll jump into that in a little bit more detail when we hit the analysis screen. But let's assume they've got $20,000 in the bank, and that's in a money market or something, so they're actually getting a 1% rate of return on that. Now, tax bracket. If you do want to show the tax benefit on your report, and this is for the home ownership options, you definitely want to put a tax bracket in here. If you don't want tax benefit showing up on your presentation at all, leave the tax bracket field blank. Now, if you want to find out a tax bracket for somebody, you can see we've got this Find Tax Bracket button here. It opens up a new tab for you that just gives you a pretty simple way of identifying what the bracket is. And you can see it just allows you to select the tax year, the filing status. Now, my guy makes 75, so he falls in this category right here, which means he is a 25% bracket for a single. Now, obviously, if he was filing jointly married, we would look at the total income for both parties and determine what bracket that would be. So I'm going to go ahead and put in my 25, and you don't have to put the percentage sign here. It automatically knows it's a percentage. Now, tax credits. This is something that's kind of a niche product. You have to be able to offer this, but this is the mortgage credit certificate. And some of you may have the ability to offer this right now, but this is a program where you do annual CE credits to keep delivering this. But it allows you to collect a fee to do this mortgage credit certificate that it actually boosts their tax benefits pretty significantly, because as a homeowner, they can already write off things like interest and property tax, but it's a deduction. A tax credit is a dollar for dollar credit. And, depending on your state, there's different levels you can do. For instance, I think here in California, it's either $2,000 or 20% of the annual interest. You actually get a dollar for dollar credit versus a deduction where you're multiplying that dollar amount times your bracket to get the actual benefit. So it's far more significant. And it's something, if you've never heard of it, check it out. It might be something that would be a benefit for you. A lot of people use the mortgage credit certificate to actually knock down the qualifying payment as well, because they're assuming a certain amount of tax credit, and so they can qualify them against that lower payment after the credit. But if you don't offer this, don't worry about it. It's okay. If you do, it's a very simple data entry. You're just going to tell us what's the max percentage of interest they can get a credit for, and what's the max dollar amount that they can get a credit for each year. And whichever one it hits first is going to be the maximum, obviously. But that will factor into the tax benefit equation if you choose to use it. I'm not going to do it today because it's going to chase us down a rabbit hole. So we'll focus on just showing tax bracket right now on the home ownership side, and then I'll come back and we'll use the standard deduction so we can see what it looks like on the rent side. Now this screen here, really just goals again. We're capturing what does this person want to spend. So we capture the mins and maxes of what they're looking for in a home. And now we get to loan products. So we've already technically got one product in there, and that's the rent. And we're going to compare this against a couple of new home ownership options. So we'll keep this one simple. And this one's just going to be an FHA 3.5% down. And anytime you're doing an FHA, you want to make sure to earmark the premium. So we want to select FHA for our upfront premium. We'll put in our purchase price. And if you're like me and you like tabbing around the fields versus using your mouse, you can actually tab through these fields. So for instance, if you started off on this purchase price field and hit the tab key on your keyboard, and you wanted to jump over to enter this as a percentage instead of a down payment dollar amount, you tab again and it'll land you on that button. And you can hit your space bar to pop the button, then tab one more time, and you're now in the down payment field. So without using my mouse, I'm just kind of navigating those fields. Now I can put my 3.5%. We'll pop the interest rate that we can get right now. Let's say 4 1/8. And we'll put in our term. Now make sure when you put in your term, this is in months. So if you get a really super high payment on something, you're likely made the mistake of entering this as years. So check on that one if you ever get like an astronomical payment. Now no IO period, no balloon. This is going to be a fixed loan, so I'll leave this at fixed. And then our next step is we want to make sure and account for that upfront MIP. So I'm going to toggle that over, put in my 1.75%, and then finance it into the loan. And then we want to apply our closing costs. So if you haven't yet created some closing cost templates for yourself, I highly recommend it. It's going to make your job a lot easier versus guessing or trying to ballpark the figures. to create a template, all you have to do is go back to one of your recently closed loans, pull a fee worksheet for that loan. So I'd need to go back to my pipeline, look for an FHA 3.5%, and I need to basically pull a fee worksheet on that, or look at the GFE or the loan estimate, and then start adding line items and start populating with the individual fees that are in there. So, we got loan origination. We'll have an appraisal. Oops, go down one. There we go. We'll have credit. Now I'm getting to these areas in the drop-down list by tapping the first letter of each one of these. So things like owner's title, I just hit an O. And then lender's title. Yeah, we'll have a few more here. Maybe a notary fee, pest inspection. And you get the idea. You're just going to keep going down the list until you have all the fees represented from that transaction. And then you can come in and enter the dollar amounts here. Now on owner's and lender's title, these ones are going to change every time. So if you can define a percentage for those, great. Most of the time, though, you're going to end up leaving these two blank in your templates. But the owner's title is going to be paid by the lender most cases, so we'll mark that as paid by lender. And then we'll just go through, enter our dollar amounts here or our percentage. If you know you're always charging a 1 point origination, then you can just put a 1 point right there. Determine who's paying it, and earmark the ones that are APR fees. If you don't know which fees are APR versus non-APR, there's a really quick and easy way to do it. Hit help, and then when you get to our support center, I'll show you what that looks like. You can actually just type in the word APR in the search. And there you go, which fees should be included in the APR. And this is just a very general description of which ones are sometimes and you might have to ask about, and which ones are definitely not. But back in Edge, once we've got this all completed and we want to save this, we're going to save it as a template by hitting this button here. And I would call this one FHA 3.5% down. And I'll put today's date on it. And then hit OK. Now, what happens now is anytime I come in to my closing cost detail, I can always have this template in my drop-down box here. And you can see I've done this a few times, but I've got all my templates here, and I can select the appropriate one. So in this case, I would actually come in, and I built this one before, so there you go. There's my FHA 3.5% down purchase. All my fees populated for me. The APR flags populated. This one is ready to roll, and that's not an APR. Okay. When you're done with that, just hit apply to loan. You can see it's populated my APR fees and my non-APR fees. Notice there's no prepaid escrows yet. I'm going to show you where to put those in just a moment. If you have collected earnest money already, then certainly feel free to put that in there. Most times when you're doing a rent versus own, you may not even have earnest money in the equation yet, so we can just continue forward. We'll pop in our hazard insurance and our taxes. And then we need to make sure and account for our FHA mortgage insurance. And because I used that selector in the beginning to determine that this was an FHA, and it was going to, and I'll show you that, sorry. So this guy right here, when I use the selector to select the FHA for the upfront premium, it automatically knows that if I enter MI here, it checks the box for me and it clears out the minimum months. So this is going to run for the life of the loan. There's no cutoff for this mortgage insurance, but it knows it does have to decline the balance every year based on the outstanding 12 months balance. Now, when we want to get the reserves in, we're just simply going to earmark the number of months for the reserves. So as long as you've entered hazard insurance and taxes up here, you can tell it how many months you want to get for reserves. So let's say 3 months of hazard insurance reserves, 6 months of tax reserves, and we'll collect an annual premium. When you do that, it's automatically taking these figures and it's piping it backwards into your closing cost detail. You can see my prepaid escrows are now represented there. And if we were to go into the itemization, we'll find that those are represented by these grayed out fields. They cannot be changed here because they're being calculated based off the data entry we just did a moment ago. So I've got one valid product to compare against renting. You can add up to 4 products. For today's discussion, I'm going to keep it down to just one product so you can see rent versus a single product. And then we get to our analysis summary screen. This kind of gives you the global vision of everything that's going on in the presentation. So there's our property appreciation. It will be defaulted for you at 3%, but certainly feel free to change that if you have different feelings about it. Short-term analysis months is going to change what's shown on this grid here, and it's up to you. This is usually you want to base this on your borrower's goals, but if you're using this for kind of prospecting or you haven't had the conversation yet, you can certainly just feel free to use the defaults we have here. But you've got a couple of different options that you can choose for the type of metric. You can see by default we're at rent versus principal paid. How much money are you throwing away on rent versus how much money are you retaining in the form of equity from your home ownership payment. We can show rent versus tax benefit. And this is just, again, how much are you throwing away on rent over 5 years versus how much tax benefit are you getting on the home ownership side over that same period. And finally, there's a tax benefit analysis. Now, remember I said in the beginning, if we use that standard deduction, we're actually going to see a benefit on the rent side too. But right now, because we didn't, the rent has zero tax benefit. Home ownership has the benefit that's associated with interest and property taxes over a 5-year period of time. Now, our long-term section defaults to principal paid, but we can also show net worth, or we can show interest and MI paid. Now, personally, I like to show net worth on here. And the reason I do that is because they do have a net worth as a renter. It's whatever's in that savings account continuing to grow over this 15-year period of time. So they have a liquid asset that nets them, $23,002 for their total accumulation over that time. But the home ownership option, they're going to deplete some of those assets for the down payment. And then whatever's left is going to continue to grow as the liquid part. But this is mainly equity that they've developed over that period of time. So when you look at these two numbers together, I mean, pretty staggering. The return on investment for home ownership versus renting is substantially different for the net worth equation. So I really like to use this for my long term. Now, if we want to illustrate what this looks like, if we go into the adjust reinvestment strategy area, you can see that it's just showing the one loan option that we had indicated. But there's your initial savings balance. That's what's in their account right now. And you can see the cash to close here, 15.4, that's going to be depleted out of that account. So their new adjusted savings start, $4,500. That's going to continue growing at 1%. And their savings liquid asset at the 15-year period is $5,200. Now, that $5,200 is going to be added to the total equity at the 15-year point to give us the figure that's showing on this graph. Now, finally, you have some property detail information. You may not even know anything for this, so it's okay to put TBD. Won't hurt anybody's feelings. And then you're going to select rent versus own. Now, notice that you can put payment notes in here, and by default, they're probably empty for you, but I might put payment notes to indicate what the net payments are. So net payments shown are principal, interest, taxes, and insurance minus tax benefit and principal paid. Now, the reason I put this here, I'll show you when we get to the very end of this presentation. And always put a quote date on it anytime you're representing a rate. This is the area where we can earmark to have the partner notified. So as long as you've got that partner email address in the first part of the wizard here, you'll have this checkbox available to you. I'm not going to enable it right now because I don't know if that's a real email address or not, and I don't want to bombard somebody. But then you're just going to generate your link. Now, this link is what you're going to send out to your borrower. This is the one that will resolve on a mobile device or in the browser. But I highly recommend that anytime you send one of these links out, you also add a video to it. And you can do that from the browser, or you can do it from your mobile phone. So once a link has been generated, it's free game. You can do it on either device. Now, if you want to do it in the browser, just hit Add Audio Video. This is going to prepare a preview of the presentation, so you can see what our finalized presentation looks like. And then it's got a record message button down at the bottom here that's going to pop open your webcam. So hi, everybody. And then all you need to do is get your mouse over the record button and then train your eyes on the camera. You want to try and keep eye contact as long as you can. But if you leave your mouse where it's at over that record button, all you have to do is tap it to start and tap it to stop, which means you don't have to take your eyes off the camera to stop the recording again. But some key notes are available in that handout that's in our GoToMeeting bar. So if you want to get some, there's a video checklist in there. It tells you, what you should be looking for, what you should be describing, how is your energy, that kind of stuff. But it gives you some guidelines on what you should be covering. Always keep your videos at 2 minutes or less. Anything over 2, you're going to lose people's attention. and it's going to be shared. So keep that in mind when you're doing your video. Make sure to cross sell your realtor partner. Make sure to have a solid call to action at the end. You know, your borrower is probably not going to understand most of what they're looking at, so make sure they call you about it so you can discuss. But because it's going to be shared, you want to make sure your advice follows this presentation. And the best way to do that is with the video. So I'm going to reduce that for right now. But you can see this analysis looks pretty much like it did in the analysis summary screen back in Edge, but we've got zero tax benefit on the rent side. Now let's talk about what happens if you do use a standard deduction. Now if we go back into our assumptions area, the standard deduction field is simply, it's the standard deduction for either a single or married filing jointly, whatever the case may be. It's their standard deduction that they can take without itemizing. If you need to find a standard deduction for somebody, it finds standard deductions. It's going to take you to the IRS site, and then it's going to walk you through several steps to collect some information, and then it'll spit out what the standard deduction is. Generally, single filing, I think it's $6,100 right now. But if we've got that in there, this is going to be a benefit that shows on the rent side. So once we trigger a save, which is either these arrows here, the left or the right arrow, it's going to update the live version of our presentation. And you can see that it's already updated. On the rent side, we are showing a tax benefit now. And if we continue that standard deduction for 5 years, that's a benefit of $76.25. It's still substantially less than what the benefit is for home ownership. But I will tell you, if this was a married filing jointly and they had something like to be more clear about it, if their standard deduction ends up being greater than what the home ownership deduction is, the standard deduction will be used for the home ownership side as well. So it's only going to show a higher benefit here if the benefit is in fact higher from using the mortgage interest and property tax. Now, remember I told you about net payments? So I put a note in here that says net payments shown are PITI minus tax benefit and principal paid. Now on the rent side, the net payment is actually the rent minus the tax benefit that you get from a standard deduction. So your end result is that $1,372, well, just short of $1,373. On the home ownership side, there's our PITI payment. We're going to back out the tax benefit, and we're going to back out the principal paid because they're retaining that in the form of equity. So we're really just isolating the net monthly cost of each option. And you can see that even though my total monthly payment is $200 higher than it is for what I'm paying for rent, my net monthly payment is substantially lower because of what I'm retaining on the tax benefit and the equity itself. Now, net worth over time, remember we talked about that does continue growing. If you want to hit the more info section here, you can actually see what we're looking at. We've got a tax benefit. We can see what that looks like over time. We can see how much principal paid. We can see where our value is going to be and where our loan balance is. So our total equity here, that $230, that's the main part of this. You can see that we've got $235 for our total net worth, but $230 is the main chunk of it. That's our equity. And then when you want to drill down on the closing, remember we saw this inside Edge, but this is also available on the outside where it shows what your start balance is for your savings, subtracting out the cash to close, and what your new adjusted savings start is. And there's our liquid asset at the 15-year point. So we've looked at what our equity would be at that point and what our liquid is, combine those figures, and that's what you get here in the graph. All right, so we are at 9:59. There is 1 minute left, and there hasn't been a single question. So hopefully I have absolutely mystified all of you with my excellent training. I hope I hope that. But in either way, I did record this, so it's going to be on our coaching call archive by the end of the day today. And you can always find that by hitting that help button. And then at the very top left, that link right there is our coaching call archive. So we'll always put in our Tuesday recordings with Dave and our Thursday recordings with our training teams so that you have those available to you. So feel free to come back and watch this one anytime. And with that said, we're almost done with Mortgage Coach University for the week. Make sure to stop in tomorrow, 8 a.m. and 11 a.m. Pacific times. Those are the Mortgage Coach University calls that are remaining for this week. And we hope to see you on future trainings. Thank you very much. Have a great day. Bye-bye.